S&P's in decent shape here as NVIDIA and tech bounce back. Let's go to Kevin Green to look at the technicals and where the market makers are penned and making bets. So KG, after a couple volatile days to the downside and a pretty substantial leadership shift, we're kind of back into the status quo here today from like a leadership perspective. But did anything over the last week really break any of the main levels we were watching in terms of where market makers are hedged and where dealers have all their positioning, et cetera?
Well, not really on the upside, Oliver. I mean, we kind of saw this stair-stepping type of action here where we had these resistance levels or these upper pressure areas really kind of getting reduced to the downside here. And we are starting to see the market really get compressed. Even though we are seeing intraday volatility, we're still staying within those guardrails, as you kind of call them here. But today is actually very interesting because we did see a nice little push to the upside, trading at around 55 or 54.70 right now in the S&P 500. But just be mindful as we go into the close here. We got a couple of strikes on the S&P 500 options that are expiring today, just to be mindful of here. The first one's going to be 54.70. That's what we saw around 30 minutes ago, gaining a lot of activity. And obviously now we are kind of seeing that move to the upside. So those players are definitely on the right side of the trade right now. Saw a lot of speculators also trying to hit the 54.80 level. I think that would be your upper wall here for today in today's session. But we continue to see a lot of activity on the put side on a day-by-day basis over the last 3 trading sessions here. The 54.50 puts, one key area to kind of note here, we actually did break that level today. We broke that level yesterday. And then also, I'm just bringing this one up, 54.35. So a lot of activity this morning. Now it's kind of leveling off going into the close, but be mindful of that. There's a lot of buying activity happening there as well, which just signifies the fact that institutions on an intraday basis are kind of moving up those puts because of maybe some of the volatility that we've seen, especially in tech. But I would say right now, if you kind of look back, we've been doing fairly well when it comes to these gamma levels and kind of identifying areas of support and areas of resistance. We haven't had a breakout to the upside or downside yet. That upside move, the major upside move, is going to be 5,500. That's going to be your major call wall that we need to break if you are a bull in this market, as we kind of have with the chart right now.
And that's exactly where we stopped out, basically. And we've kind of gotten reattached, it seems, to sort of the baseline then. Of kind of where we're at in that, 54-ish, 50, 54.60, kind of where we seem to have some magnetism?
Yeah, so 54.60 seems to be the area that has been that neutral zone, if you will. Okay. So when we talk about these neutral zones or these intermediate pressure areas, that means that we're kind of at zero, right? So we could have positive days where we move to the upside and there's no real concern by dealers or themselves to really kind of hedge themselves or try to compress vol. And then we have the situation where we go below that 54.60-ish area, and that's where we kind of have these negative gamma type of situations where we have significant sell-offs intraday, and then once we hit that 54.50 level, that's when we kind of get buyers stepping into this market. So that's kind of the structure right now. Once again, downside has kind of gotten moved up a little bit, and then the upside has compressed to the downside here. And we'll kind of go over a technical chart here in a little bit to kind of highlight that. But I think it's really important to kind of note low volume sessions, still overall, when you're looking at the open interest, bullish positioning from institutions, but you're starting to get some that are nibbling at those puts, trying to hedge just a little bit because of maybe some of the fears around NVIDIA, SMCI, some of these semiconductor names that have had a lot of volatility over the last 48 hours.
Okay. All right. So the indexes haven't broken. It seems like there is generally still pretty good support, but it also kind of seems like there might be some resistance now that's kind of been established overhead, where then if we come back under pressure, if we kind of just go with sort of the theme of the last couple of days, I know we're bouncing back today, but if we kind of go with the theme of being under pressure, where would it start to get painful that then might kind of escalate, or maybe that's not the right word, but sort of intensify selling to the downside of, like, where's that pain point down there?
So it's going to be 54, let's say 54.45. It's literally 54.50, but we have been breaking those levels a little bit and kind of remaining under those levels, and then we have buyers stepping in. So this is going to be a chart that really kind of highlights this, to say the least here, Oliver. So today, 54.65 is kind of that positive dealer area. We have reached that and breached that, but we are kind of retracing back to the downside here. 54.50 going to be that negative gamma area that you really want to hold. I just want to be mindful, though, too. The heavy lifting today is coming from tech. And what we've seen over the last couple of trading sessions, the last 30 minutes, tech has faded. And tech's the only thing holding us up. So if we're already kind of approaching some of these positive gamma areas, or these areas that we can see some resistance points, and we're 30 minutes left to go in the close, that tends to kind of reverse itself. So be mindful of that. And we're kind of seeing that reversal on an intraday basis in real time right now. So kind of keep your eye out on that 5,400 level. Let's go to another chart here, though, real quick, because I want to kind of talk about these technical levels. We've been talking about this for the last week and a half, 2 weeks, Oliver, and I think it's a really good exercise, and I think there is a lot of value there. But let's kind of take out all of those boxes and gamma levels and pressure levels, and let's just get back to the basics.
Okay.
The neutral area, that first area of negative gamma, or that neutral area that we've been focusing on last week, was 5460. And if you kind of notice, on Thursday, we briefly touched that level, touched it for around 3 minutes, and then we bounced right back off of that level, tried to make newer highs, were unable to do it. Guess what? Came back, tested it again on Friday. Friday, we opened up at the 5460 level. We saw buyers quickly stepping into that level. Then after midday, we came back, started testing it again. But if you kind of notice over the last couple of trading sessions, we're staying in those zones a lot more. We're making lower highs on a price basis. We're making lower lows, and you're staying in these negative gamma areas a lot longer than probably the market would want to hope. And then the upside moves have been lower highs. So I would just be a little bit cautious here. Yes, the institutional positioning is very bullish over the long term, but it does appear that these areas of support that we've been testing are starting to get a little bit weaker and weaker. And I just wanted to kind of illustrate that on this chart where we kind of talk about these gamma walls. This is the last 5 trading sessions, man, and this has pretty much been spot on. We have a lot of dealers that are selling the rips, right? They're selling the upside resistance levels. They're buying these dips, but it's taken a little bit longer for them to buy these dips over the last couple of trading sessions, and we continue to test these negative gamma areas. I would say overall, on an intraday basis, just be cautious. That could mean a breakdown could be occurring here in the next couple of trading sessions outside of some fundamental data that comes out that kind of tells us otherwise. But I do believe that it's really good to be able to illustrate kind of what we've been highlighting and just putting it back into the technicals and seeing how that shapes up.
Seems like some of those walls are getting a little permeable kind of down there. We're spending some more time exploring those boundaries to the downside. So I like the context. All right. Appreciate it, KG. Thank you very much.